Hello students, I am Vipul Mittal, and in this session I will discuss which method you should use to calculate depreciation. So you have various methods of calculating depreciation. You can use straight line method, declining balance method, sum of the years digit method, units of production method. You have various methods, but which method you will use to calculate depreciation? Let's first start with what actually is depreciation. Depreciation accounting is a process of allocating the cost of a tangible fixed asset or a group of assets net of salvage value over its estimated useful life. So it is a process of allocating the cost. It is a process of allocating the cost of the asset over its useful life. For example, you acquire an asset for $100,000. Its useful life is 10 years. All right. Now, you are capitalizing this asset. You are not expensing this amount of $100,000. When you're capitalizing this, you're also depreciating this asset. That is, you're allocating this cost of $100,000 over its useful life. So for example, if you allocate it on straight line basis, then annual depreciation is $10,000. What you have done, you have allocated the cost of this asset over its estimated useful life using a method that is straight line method. You have allocated the cost. So over a period of next 10 years, total depreciation will be $100,000. Now, first thing is that how much you allocate. You allocate cost minus salvage value. In this case, there is no salvage value. Salvage value is zero in this case. That is residual value. If there is any salvage value, you deduct that from cost and then you allocate. So if salvage value is $10,000, then you allocate $90,000 and annual depreciation will be $9,000. If salvage value is $20,000, then you depreciate $80,000 only. How much cost you will allocate to future years over its estimated useful life? $80,000. All right. If salvage value is $30,000 and useful life is 10 years, then if you are using the straight line basis, then annual depreciation is $7,000. How you calculate this? Cost minus salvage value divided by useful life. So depreciation accounting is a process of allocating the cost net of salvage value over the useful life. But how you allocate this cost? Do you use straight line method or declining balance method or sum of the years digit method, unit of production method, or any other method? You can use any method, but that method should be systematic and rational. So you can use any method that results in systematic and rational allocation. So this allocation should be systematic and rational. So you spread the cost over the expected useful life. considering the services or the benefits you obtain from the use of the asset. If you are obtaining more benefits in earlier years, then depreciate more. If you think that benefit from the use of the asset is spread equally over all the years, then use straight line method. So allocation should be systematic and rational. Allocation should be equitable. Allocation should be in accordance with the services or benefits obtained from the use of the asset. So you use straight line method. You use straight line method when it is expected that the benefits from the use of the assets are spread equally over all the years, over its useful life. So the benefits or the services that you obtain from the use of the asset are spread equally. So if the useful life is 10 years, every year you are getting same benefits from the use of the asset, then straight line method is preferred. Declining balance method. Under this method, you record more depreciation in earlier years and less depreciation in later years. Why? And why this method is preferred? This method is preferred when productivity of the asset falls in later years. So in initial years, asset is more productive, more efficient. There is less of maintenance cost on the machinery. But in later years, there is more maintenance cost, less productivity, less efficient, because the machinery or the asset is less productive in the later years, is less efficient in the later years. More maintenance charges are incurred in later years. You record less depreciation in later years. But because the asset is more productive in earlier years, more efficient in earlier years, and less of maintenance charges are incurred in earlier years, you record more depreciation in earlier years. And declining balance method is preferred over straight line method. Why? Because you are considering the services that you obtain from the use of the asset. You are considering the benefits you are getting from the use of the asset. More benefits, more depreciation. So whichever method you are using, consider that it should be equitable, it should be systematic and rational, and it should be in accordance with the services obtained from the use of the asset. Now, one more question that you have in front of you is that can depreciation calculated for tax purpose be used for financial reporting purposes? So this is the question that you have. So you have calculated depreciation for tax purposes considering tax rules. And can you use that depreciation figure for financial reporting purposes also? Yes, you can use that. You can use the depreciation that you have calculated for tax purposes, for financial reporting purposes. But you have to consider the recovery period or the useful life. So for tax purposes, you have the term recovery period. Cost recovery period. For financial reporting purpose, you have this term useful life of the asset. If cost recovery period is 5 years, for example, that means you are allocating cost of the asset over a period of 5 years. If for financial reporting purposes, useful life is 10 years, that is, you are allocating the cost over a period of 10 years. Both these terms have same meaning, cost recovery period or useful life. Now, again, the question is that can depreciation calculated for tax purposes be used for financial reporting purposes? And the answer is yes, you can use that, but you have to consider the cost recovery period and useful life. What is the recovery period specified under tax laws? What is the useful life for financial reporting purposes? And if you think that this cost recovery period that is specified under tax laws for this asset is unreasonable, considering the useful life of the asset, then do not use tax depreciation for financial reporting purposes. For example, you purchase an asset and the cost recovery period specified for this asset under tax laws is 5 years. But for financial reporting purposes, its useful life is 10 years. Now, can you use tax depreciation for financial reporting purposes? Answer is no. Why? Because the cost recovery period specified under tax laws is unreasonable. It is unreasonable considering the useful life of the asset for financial reporting purposes. This 5 years is unreasonable considering the estimated useful life for financial reporting purposes, that is 10 years. If this is the case, then do not use tax depreciation for financial reporting purposes. Otherwise, it is okay. You can use tax depreciation for financial reporting purposes. All right, students, for more such informative videos, please visit our YouTube channel and we'll connect again in another video. Goodbye.